Good morning. This is Mark Soderberg with ADM Investor Services with your morning ag outlook for Tuesday, December the 5th. Prices overnight pretty quiet, not much of a range. As I speak, we are firming up a touch. Corn's now steady to a penny better, 3 to 5 better in the soybeans, near session highs. Products are mixed. $2 to $3 higher now on the meal, and a touch lower on the bean oil. Wheat prices are down about 2 to 3 cents across all three classes. Speculative traders yesterday were sellers in the soybean complex, buyers in the wheat, pretty much flat in the corn. Open interest did slide just over 14,000 contracts yesterday in soybeans, suggesting that funds were lightening up on long positions. Open interest down a little bit in the meal, while it was up about 3,000 contracts in the bean oil. And despite the speculative buying, wheat open interest was very little change, actually up 1,000 contracts in Chicago, down about 100 in Kansas City. South American weather really just continues to be the key fundamental factor driving prices. I think cumulative rainfall in the drier areas of Brazil late this weekend and into the first couple days of this week will prove a little bit disappointing. However, long-range models continue to lean towards an improving weather picture by mid-month. Plantings are moving forward despite the weather challenges. Soybean plantings now have reached 85% at the end of November. That's down from 91% a year ago. And first crop corn plantings are now just over 90%. But, that seems to be the problem so far. This growing season. Rains continue to be backloaded in the forecast with near-term rains scattered in light. As a result, we are starting to see production estimates slip a bit. Nothing major just yet, but the average estimate for Friday's WASDE report is Brazilian soybeans coming in around 160 million metric tons, down from 163, but that's still above last year's record of 158. Similar story in the corn. Expectations are for about a 2 million metric ton reduction, down to 127 million metric tons. Not much change in Argentina just yet. I think I'd actually need a little bit higher, but right now the average trade guess is a little bit of a higher tilt in beans, a touch lower in the corn. Global stocks are expected to slip a little bit for both corn and soybeans with no changes in wheat. Domestically, I'm not looking for any changes in ending stocks for corn, soybeans, or wheat this month. The USDA has left the corn and soybean ending stocks unchanged in the December WASDE report now 3 out of the last 4 years. I look for that trend to continue. Longer term, however, I do look for a continued shift in the soybeans away from exports and to crush. If we see any changes this month, I think it'll be limited to into 15, maybe 25 million bushels, with total usage being left unchanged. Yesterday, China did buy 16 million metric tons of U.S. soft red winter wheat, and that is their largest purchase of U.S. wheat in just over 3 years. We also saw production estimates from Canada and Australia that were below year-ago levels. However, they were slightly better than expectations. Prices have seen a nice little rebound here as of late, and we'll see if that can continue into month and year end. And in corn, exports to date really have been pretty decent, up 33% from year ago versus USDA forecasts of up 22%. But so far, we really have not seen significant buying from China. And until we do, it just seems like prices will struggle to rally, with U.S. inventories projected to be well over 2 billion bushels. But speculative traders with a pretty sizable short position, I don't think it would take much buying from China or even a little bit more of a threatening weather problem in South America to trigger a nice year-end rally here as funds cover some of these short positions. So thank you very, very much for listening. I hope you have a wonderful day.